I stress draft.
So just about finished up.
Below 6.
Yes.
Yes.
We, in front of you have two documents. One is the presentation that I'll go through some of the key items and certainly open up for questions, or if you have questions during the presentation, feel free to jump in. And the other one is the draft financial statements, which the supervisor did indicate are in draft form. Right now, our internal reviews are done. We're waiting for Dave's sign off, and then a representation letter will be ready to release. So for all intents and purposes, we believe these to be final, but we'll refer to them as draft and tentative opinion throughout. As Supervisor said, my name is Luke Malecki. I was the engagement partner on your audit, your external audit. Charles Trotcher couldn't be with us tonight. He is the manager and also is available for any questions throughout the year as they come up. We'll go through this presentation here, and I'll kind of give you some direction on where the financial statement pages kind of line up with the graphs and the slides. So the first slide is just the products of our audit. We're mainly hired for to put an opinion on the basic financial statements, and the reason you need that really, the most important is to go out to the bond markets for bonds, and any sort of funding for capital projects, those kind of things. But also to submit to the state for state grants, federal grants, as you get federal grant money, and then of course to the residents of Lancaster to look at that. What we do is we perform a series of tests on the financial statements and the internal control structure to determine whether or not the numbers that are in these draft financial statements can be relied upon by an external party. The only thing that belongs to us in this financial statement is our professional opinion, and everything else prepared and compiled with Dave on his behalf. But he certainly has the capabilities of doing that. Last year, you'll see we had what we would call significant deficiency. There's three levels of observations and findings. The first level would just be an observation or a management letter comment that we have a couple of those that we'll go over throughout the presentation. The next level will be a significant deficiency, which is a management letter deficiency or internal control deficiency that warrants the attention of the town board. As I said last year, in 2017, there was one regarding certain accounting policies within the finance department. Those were all addressed during 2018, so we're happy to announce that those have been removed from the financial statements and there are no findings in the current years. If there was a significant deficiency that could cause a material misstatement of the financials, that would be a material weakness. Again, there are no such findings of any sort within there. There are some observations, some internal control observations that we do have that I'll go through towards the end. The opinion that we expect to release is an unmodified opinion, which would be a clean opinion. There's one explanatory paragraph in this year's opinion that's unique, and that's the town implemented what we refer to as GASB Statement Number 75. Government Accounting Standards Board is kind of the ruling body for how these statements are presented. GASB Statement Number 75 took your other post-employment benefits obligation and made it bigger. That's the best way to put it. Back about 10 years ago, there was GASB Statement Number 45 that said any post-employment benefit, any health insurance that's paid to retirees needs to come onto the financial statements. And that statement back 10 years ago said, okay, you can ease into it year to year. Well, 10 years down the road, GASB 75 said, you know what, that was a bad idea. We're making you book the whole liability this year. So the impact to the financial statements is nothing to the fund statements. So the fund statements, which we use to budget, which you use to monitor your budget's actual expenses, those still exist as they always have been, as a pay-as-you-go type structure. Where the difference is the government-wide financial statements, those ones that bring in the long-term debt and the capital assets. What we had to do is restate the liability from $3.6 million is what we reported as last year. The actuarial came in and said under the new standards that liability has grown to $14.5 million. So yeah, again, it doesn't impact the way the day-to-day decisions, the pay-as-you-go. It's just a financial statement disclosure, and it is in the government-wide financials. So we wanted to bring it to your attention because it's something new for this year. It really is just it's kind of a catch-22 because in New York State there's really no capability of funding it. So it's an unfunded liability that just sits on there, and as the benefits age out, then that's how the liability gets reduced.
And just if I could jump in, so just to be clear, it's the same, it's restated at the beginning of this year, so it's the same as it was at the end of last year. It's just that it wasn't a number that was required to be put in the statements last year. So now it's a kind of a different standard. So nothing's changed except for what we're required to report. Right? Is that accurate?
Yeah, and now we're in the phase of the new normal, which includes the full liability. The next bullet there is the management letter. As I said, we have a series of recommendations. For today, we're just going to bring our considerations up to the board. We're not sure which ones will actually be included in the final management letter, but I thought it fair to kind of bring to your attention any observations that we had throughout our audit. The auditor communications letter is a separate letter from the auditors to the governing body or the audit committee. In this case, you are both. We'll summarize a lot of those communications in the next slide, so I won't get too far into it. It's just our responsibilities, your responsibilities, and so forth, any key assumptions and estimates. We also issue a departmental report that includes the activity of the town clerk, tax receiver, and the town justices. On top of those 3 audits, we also do departmental audits of the controls within the recreation department, senior center, and the youth services. Within those departments, there are a couple areas of deficiencies that we did want to bring to your attention. Not big enough to be a significant deficiency or a finding, but something that does warrant the attention of the board, maybe to change some of the policies a little bit. The first, in the senior center, they use their petty cash fund a lot in their operating activities too. So in other words, they'll raise some money for some fundraisers, and then they'll use the expenses for senior center activities. We didn't see any issues with the way the money's coming in or the way the money's going out. The problem that we had is that nothing's getting reported to finance. So we don't have a true picture of the activities of the ins and the outs of the senior center. So it's really more of a reporting condition, but it does also extend to the control. If there was a bypass of the internal control structure, would that be detected by the town in the way that things are operating right now? So something that it may be worth attention that at least on a monthly basis or some sort of quarterly that those activities get reported to the finance. On the other, another department was in the Justice Department. There's an unreconciled item of about $1,900 that has been carried month to month for most of the year, but it is still out there. And we think a lot of that could be prevented through a formalization, maybe borrowing the finance department's policies and procedures for the bank reconciliation within the Justice Department, and hopefully getting that to a level balance. And then once that unreconcilable difference gets to the same one after a while, then you can write it off and start from zero and have a new starting point. So a couple items within the departments that we wanted to bring to your attention. I believe that those will both make it to the management letter. The next slide is the auditor communications. As I said, this main purpose of this communications is to kind of identify what we do and what the town does. Foremost, our responsibility under GAS is to form an opinion of your financial statements and whether or not they can be relied upon and they are free from material misstatement. So we test internal controls. That's how we do get exposure to internal controls. We're by no means doing a full internal control audit, but we're looking at some of the basic internal controls throughout the town. So that's how we do have the ability to come up with some of these observations. From those tested controls, we design our tests of the general ledger to make sure that the activity that's being recorded during the year actually represents what happened during the year. And as of the balance sheet, as of December 31st, we'll test the account balance, which is mostly made up of cash in your case. The significant accounting policies, it's a lot easier just to go over what changed from year to year. These are all summarized in note 1 of the financial statements, which I believe begins on page 23 of the financial statements. Really, the notes that start on page 23 act as a narrative to the financial statements. So if there's any item as you're going through the actual numbers that you're looking for a little bit more detail, maybe some information, the notes would be the first place to be directed. And then, of course, if you can't, call our firm or call your director of finance here, and we'd be able to point you to the right direction. But in the case of the presentation, anything that's changed, you had to implement 3 new GASB statements. I already talked about one that had an impact on it. The other 2, GASB 85 and 86, they didn't even really have any impact at all. So the only difference between these financial statements and last year's financial statements is that OPEB item that bringing that big liability in, but everything else is very comparable. Significant accounting estimates under that same theme, very similar estimates to last year as far as the liabilities that are in these financial statements. The only update would be that OPEB liability, but you record and we're required to communicate an estimated liability for compensated absences, sick and vacation leave accrual, self-insurance. You are self-insured with the workers' comp and the health insurance, and then the pensions, which are sponsored by the ERS and then through your LoSAP program.
Maybe you want to say ERS and LoSAP probably doesn't mean anything.
Okay, sorry. Employees Retirement System, which is through the state, and then LoSAP is the Length of Service Awards program, which is for your fire districts. For those the later 2 and the OPEB, we get an actuarial evaluation. Well, the town outsources an actuarial evaluation. We'll rely on the experts to put that together. We'll compare your assumptions, because there's a lot of key assumptions in there. And there's a huge fluctuation in just 1 percentage point in some of these liabilities. If you're looking at your discount rate, say 7 versus 8, you can see a fluctuation of a couple $1 million. So it's important that you are within the industry standards. So we compare you to other towns, other municipalities, make sure you're right in that ballpark, which you were. With those, and then self-insurance as well comes from your third-party administrator. Compensated absences is developed in-house. We test that calculation to make sure it's fair. We didn't have any exception with those estimates. Independence, I'm required to announce that we comply with all ethical requirements regarding independence. Our firm is independent. Everyone that's touched this audit and everyone in the firm is independent of the town. Some other matters, we had no disagreements, no difficulties with any department. We didn't just stay with finance. We went out to police, highway, B&G. I mentioned the rec, youth, senior, engineer. Everyone cooperated, and there was no real hang-ups throughout there. Shifting a little bit to the finance. On page 17 of your report, you'll see a summary of what we refer to as your major funds. A fund classifies as a major fund if it meets a certain criteria of the size of its liabilities, expenditures, or if the town requests that a fund be presented as a major fund. The remaining funds that aren't listed here are all, other than the self-insurance fund, are all listed within that non-major fund activity. But for the purpose of the presentation, we focus mostly on the major funds because those carry the weight of what the town's operations were. So when you look at the town's operations, this past year there was about almost $33.2 million of revenues when we look at the operating funds. We remove your capital projects activity, any money that goes to the capital project fund, and the expense. So you'll see the level of service throughout the last few years has remained relatively stable. Your expenditures varied from $30.5 million in 2014. Now it's up to about $32.7 million. So really not a very dramatic shift. But more importantly is identifying that the lines are very close to one another. The blue line and the red line, meaning you're achieving the goal of revenues matching expenditures.
It doesn't get much better than that.
No, it doesn't. Especially when your fund balance in 2014 was $9.8 million. At the end of this year in 2018, it's 11.8. So it's a difference of about $4 million. That sounds like a little bit crazy, but the item that you have the most control over within the town board is the general fund, and I thought this was pretty astounding. The general fund's fund balance today is $736, different than it was in 2014. So you can't really be accused of overtaxing or undertaxing. It's kind of spot on for the last 5 years of what money coming into the general fund and money going out. The areas that there were increases were the police and the highway. I think we all recognize the highway fund was growing, but a lot of that was because of storms that occurred before 2014 and the reimbursement happened after 2014.
Right.
So that's why the highway fund increased by about $1.4 million over this 5-year period. Police fund, that's the recipient of all the sales tax, so that would kind of gets the benefit of any unpredicted shifts like we had last year, actually increased by about $300,000 over those same 5-year period. When you look from 17 to 18, your revenues increased by about $4.1 million. The bulk of that was in your general fund because of the tax increase and about $100,000 of additional interest earnings, which is another point that we'll get to later in the presentation. The police fund, as I mentioned, was a recipient of unexpected sales tax this past year, increased by about $350,000 in the revenue side from that sales tax. The other governmental funds, those minor ones, increased by about $500,000. Town on-site village, highway fund, and the refuse fund all contributed to that increase in revenues. The one fund balance I didn't mention, if I could just go back, is because you're probably telling up 1.4 plus 300 is only 1.7. What's that remaining? Well, the remaining was kind of both. One was an offset of the capital projects, but then the miscellaneous fund, your special revenue fund, holds your recreation fees, your recreation filing fees, which has to be used for recreation projects in the town. That increased by $800,000. So within that fund right now is about $912,000 that's just sitting there to be used for town benefit. We actually are considering putting in the management letter, bringing to the board's attention that the level of available revenues within that fund that can be used, and we recommend planning for a one-time use of that revenue to systematically kind of use that to benefit what they're for, which is the recreation programs.
I did not put him up to that.
No, Charles fund this one. We'll give him credit. He's not here. On the expense side of things, you went from $31.3 million to $32.6 million, an increase of about $1 million. Kind of followed the revenues, where the main increases were in the general fund and the police fund to support. Those revenues were used to support growing expenditures within those most active funds. Shifting now to the more individual fund basis, these individual funds, budget to actual worksheets, are actually start on page 57. So if you want to see how your fund did, a specific fund did as compared to the original budget, that's where you would look. The variance, that column that's shown on page 57, is compared to the final budget, so take that with caution. So any amendments that occur during the year for grants that come in, or any additional use of fund balance, the actual column gets compared with final, not the original. So when we look at the general fund, and this is also kind of corresponding with page 4 of your PowerPoint, you see that the revenues and expenditures are very similar to what we'd expect when you have a fund that doesn't change by more than $1,000 over 5 years. They're very tight to one another. Sure, some years the gap is a little bigger, some years it's a little smaller, but at the end of the 5-year trend, it's a very stable fund. When you look from 17 to 18, as I said earlier, the revenues increased by about $400,000. The bulk of that was in taxes, but there was a $100,000 increase in interest earnings. Expenses also increased by $440,000. What's interesting about that is the contractual and those controllable expenses actually stayed pretty level from year to year. That $440,000 increase is made up by one-time expenses within culture and rec for parks and recs, vehicles and equipment was about $200,000, and then of course the $260,000 roof that was performed on the historical building. So those two expense items really accounted for the increase from one year to the next. Had those not occurred, you'd have a very flat line year for expenditures within the general fund. When you compare the general fund to the budget, the original budget you see on that page 57, and the third number up on the way left is $472,000. Maybe I have the wrong page number. Let me double check. I got it. Is it 57?
Yep.
Okay, good. The plan was to use $470,000. Well, revenues came in much more favorable. They came in at about almost over $300,000, about $300,000 over budget, mostly because of unanticipated interest earnings from both town efforts and favorable markets, as well as departmental revenues. Your park and rec fees increased within the pool charges, license and permits, kind of an uncontrollable, but that saw a benefit in the past year of about $40,000, as well as your fines and forfeitures. The tickets coming in and being paid within the town went up to about $50,000. So that favorable revenue, combined with some pretty moderate expenses and actually some savings on the employee benefits side of things within the retirement and the health insurance, actually flipped that 470 to just reduced it to a $20,000 decrease from last year in the fund balance. That compares to what happened previous year in 2017. You saw fund balance grow by $89,000. Again, not trying to get on either side of that fence, just to make sure that the long-term average is as close to zero as possible, which you're achieving. Looking quickly at the police fund, the police fund, which is the next slide, and also is the next page within your financial statements. The police fund saw revenues increase by about $350,000. The bulk of that is a $300,000 increase in sales tax, but also a $50,000 interest earnings increase occurred as well. On the expense side of things, your expenses increased by about $250,000. That's all within the public safety line, and those are for wages. Those are the contractual wages with the police contracts that were settled, and so we saw that increase slightly. When you look at the budget, the planned use of fund balance, you plan to use about $70,000. Well, because of that sales tax coming in, you actually increased your fund balance by about $400,000. So there was a nice flip there, some minor savings within the expenditure line items, but the main driver in that was your beneficial receipt of sales tax. The next slide and the next page in the book we're now on page 59 in the budget to actuals, and looking at the highway fund town outside village. Highway fund town outside village, the revenues decreased from last year. You'll see quite a heavy drop from 17 to 18. That's because in 17 you received a lot of that FEMA and SEMA money from storms that occurred back in 2014 and previous. So $350,000 of unexpected or unplanned one-time revenue came in last year. That didn't repeat itself. So you kind of went back, if you compare 16 to 18, pretty level in the revenues from those 2 years. On the expense side of things, we last year talked about the fund balance growing in the highway fund. There was a planned effort to increase the streets and maintenance. That did occur. We saw about $380,000 more active transportation, more highway paving, more effort to the roads within the town. The plan actually was to use $600,000, but because revenues came in a little bit more favorable, just throughout the sales and, excuse me, some refunds coming in from prior year's expenses and fuel reimbursements and so forth. Revenues came in about $200,000 more favorable. Expenses came pretty close to what was originally budgeted. $250,000 was used within the highway fund. The last major fund is kind of boring, but it's a major fund, so we bring it up. It's the fire protection district. Essentially, we raise taxes to pay the fire protection contract, so it's a pretty predictable fund, as you can see by those lines, almost touching. Ending fund balance within that fund is about $220,000. Some just quick observations. I mentioned a couple of times about the investment earnings. I think it's worth pointing out that your investments earnings grew by about $270,000 from the prior year. And to put that in perspective, back in 2017, you're in about $40,000 townwide on your investments. This past year, you're up to about $300,000. So that's an increase of about over sixfold. Both combination of what's going on in the finance department as well as some favorable markets. So something to keep an eye on. Hopefully it continues. The trend continues to help with the budget process. Certainly unpredictable, so it's hard to rely on such an increase, but maybe a little bit here and there. I mentioned, adding a comment, and I think it's $912,000. It's actually $917,000 in that rec filing fees area. Some other observations throughout the town. We talked about the departments. We do recognize that there's some finance department and other departments throughout the town are having employees get to that level of retirement. Now's the time to start planning for that succession planning and also taking advantage of that succession as a chance to kind of take a fresh look at the departments and use it as an internal control assessment. One thing that we like to say within internal control assessment is just kind of ask the department, maybe put a policy together or best practices together to give to your department heads that help them identify where there could be an opportunity for fraud based on segregation of duties. That's the biggest mitigator of controls, to separate the key duties. If there's an employee shares any of the duties of custody of an asset, reconciliation of that asset, accountability for that asset, or bookkeeping for that asset, if any two of those duties are shared, there's an opportunity for fraud. Smaller towns, smaller departments aren't always going to have enough personnel to split up those duties, but what you can do is identify the areas where a mitigating control could come into place, or at least address the control, weigh the comfort or the cost of that control versus the benefit, and perhaps it won't go. But at least doing that analysis should protect you from the public perception of if a fraud were to occur, making sure that departments are kind of doing that self-assessment of internal control. In the absence of an internal audit function, that's kind of your best case scenario there. Some little IT items. We noticed that there still is admin access with the Director of Finance. We recommend that being restricted. It is difficult because there needs to be certain overrides here and there, but maybe there's another mitigating control that could kind of offset the admin access area there. We did notice the server room has a lack of physical securities. People could just walk in during the middle of the day, plug a flash drive in, and take sensitive data or even install a virus. So it may be worth looking into installing a secure system within that. And then we know that you do have a backup plan and a disaster recoveries, but it's housed in a brain. Maybe putting it on paper and formalizing it and getting it out there so that if something did happen to the IT side of things, that there's a known backup plan out there. On top of that, the last item that we'll put in the management letter is just new pronouncements that are coming forward. There's 7 new GASB statements coming up. We'll work with the finance department to make sure that we ready to hit those as they come due. So that's the formal presentation. If there's any questions, I'd be happy to address them now. In the event that no questions come up now, but as you're going through the document, something comes up, both my information and Charles's information is on that last slide, so feel free to contact us as needed.
So I can just jump in real quick. So I'm going to be finishing my review over the next couple of days. We'll finalize the reports, and then you guys will all get them within the next couple of weeks. And on the next board meeting, we should have a resolution that the board formally accepts the final version, not the draft version, as he stated for the town. So.
Okay, any other questions? Thanks for your time.
Thank you.
Thanks, Luke.
The 4 minutes.
Nailed it.
Yeah, good job. You probably wouldn't need all
I
that.
just love this stuff too much.
Yes. You can tell we're friends.
Thank you.
Say hi to Charles.
I will.
Good to see you.
You too.
Hi, Dave.
See you soon.
Thank you.
Quickly, let's see here. A couple of things. Okay, resolution number 21. And I'm just going to go through the things that, I need to have you note. But the highway superintendent sent a letter this afternoon starting the employee here, Mr. Ray, with an effective start date of today.
That was my fault. I confused Kim with that, and she thought he couldn't start, but for me, I said, no, we can start because you acknowledged we can start, so that's my fault.
Right, that's okay, no problem. So we just need to amend that resolution. So guys, in resolution 21, change the date to June 17th. Is everybody comfortable with that? Okay, all right. And labor, these are appointments of the highway superintendent. We merely ratify. So, and he will be starting at the contractual rate for the blue collar contract, the CSEA blue, at 80% and at 6 months, over 6 months, correct? So, it's the standard starting rate, whatever that is. So, that's not right. Okay. So, let me see here. The next one, we've been getting, a number of drainage easement requests here. Our town engineer recommends against allowing people putting sheds or fences in drainage easements for very, very obvious reasons. It ends up being an expense to the town because when they put any permanent structure, fence post goes right into that pipe. These drainage easements are piped, they break the pipe. It's not noticed for several years until they have a backup of water, and then it becomes the town's problem. And I know a lot of people say, well, I will take responsibility myself if something happens to it. And 2 years down the road that someone sells their property, the drainage easement is on that survey when they buy it. And it is incumbent on their attorney to say, you have an easement here, you can't do anything on that. So I just want to, just a little bit of a lecture. Be very, very careful when people start asking for relief with these drainage easements because it ends up being the town's problem and very, very expensive. And, that burden should not be put on all of the taxpayers. So let's see here. And the Erie Street culvert, Dan, I guess I was surprised that the resolution didn't have on yet.
I think what happened, Ronnie called me on that. I don't think Lisa had told him, but it had transpired in the work session, and we all agreed to have Gideonado go ahead since Ed Schuler got him to drop his price. And I guess Ronnie didn't know that at the time.
We'll talk about that back in May, the second meeting in May. Okay. So, but I know we'd like to get it done before school starts.
Right.
I got just one super quick
Yes,
one.
super
Resolution 23, Lancaster Youth Bureau. I had a question from someone because we're hiring someone from Maryland. And that is, we've hired him for many, many years. He's actually a former Lancaster resident. He's here for the summer. He lives with his mom. He's been working with the Youth Bureau for years and years and years. In fact, he's trying to move back. He's a teacher. He's trying to move back to work in Lancaster.
And this is for their
Summer theater.
theater.
Yeah, he is a specialized
right.
service.
So, okay, good.